All right, folks, welcome to a market recap. Today, we didn't take any trades. It was a beautiful day. Market there was a CRT, market did pull back, but the market never offers an entry because at the CRT low, there was not a valid low. So I was looking for a repurchase and the key level number got tapped. So here goes a lower time frame. A lot of people got messed up on this trade. But if you hit each other along this order block with this, CRT, if you see the low of the CRT, 8 o'clock low, there's not a valid low here. You can see you got the right model one, which is beautiful. This is the right model one all over here. You have the right model one, and you get stopped out instantly by a big bearish candle. Why? It's supposed to do that because the valid high, valid low rule matters a lot. The key level matters a lot. And you want to have execution rules. And as I said, I preach a lot about having the right bias, right? Not having the right bias all the time, but being consistently precise with your bias. So consistently having the higher time bias correctly, which is very easy, very easy. But one other thing I preach a lot is to have execution rules, because execution rules, what does execution rule do? A execution rule basically helps you avoid setups, and it basically helps you avoid low probability setups, as well as it helps you know when not to trade through execution rules, because the bias is there every single day. There's going to be a setup every single day. But if you're going to execute every setup every single day, you're going to fail. This whole week, we go back here. Setup on Monday, failed. Right? It probably wondering, well, it did go to a direction. Tuesday did go to a direction. Inevitably, it failed. Wednesday, it delivered. But guess what? It overall failed. You can see market came back all the way up here, stopping it out. Well, the Wednesday trade to the upside, which were longs here, it delivered, right? Market is not retracing all the way back down, but it's not worth taking a loss here, and take a one win here. The win, probably wondering, but like, well, I would have made way more than I would have lost. I'm still chilling. It's not about you actually, losing and making, but making more than you lost. It's about the mindset, right? Your psychology is important. Your mind can't comprehend too many losses, and this is why you gotta, because if you take these two of these losses back to back, you're highly gonna miss out on this setup. You're highly gonna be burned out. So that's why you want to take very precise trade. That's why I preach a lot about having execution rules. Knowing when not to trade is more important than when to trade. I preach about having the right bias a consistent amount of times, having precise bias, which is pretty easy in the higher time frame. Higher time frame, there's less candles to draw, so it's easier for you to predict where the market's gonna go in a higher time frame. But and you can see this whole week, our higher time frame bias was incorrect. We had a weekly IRL to ERL. As I said a long time ago to you guys, the wick of the rejection block will cause a retracement, and guess what? The market did retracement. Before it takes out the wick, market will tap the body and eventually then go lower, accumulate enough. You can see right here, accumulated, eventually push out of here to the high. You can see tap the threshold as well before going lower. Then eventually when lower, eventually up high. This is just the price action detail. As you guys know, rejection blocks will cause retracement. So it will cause, let's just say this is the rejection block, this is the 50%, this is the wick. It taps the rejection block at the start of the rejection block, it will cause a retracement, accumulate enough orders, eventually go to the 50% mark. Eventually 50% mark will cause another retracement, accumulate a little bit more, and eventually before attacking the high, it's gonna tap the first mark, retrace, accumulate, go back to the second mark, the threshold of the rejection block, tap it and come back down, retrace a little bit before it's taking out the wick. Then this is the wick where there's a lot of liquidity resting around here. Eventually market takes it out by a big candle. And I could show you guys some examples back in the chart. As you guys know, I will always give you guys proof right over here, registration block, order block as well. You first tap the body and the threshold, then when lower accumulated enough here, then you proceed to take out the wick. This is just the pricing details, and probably wondering, well, where did you get this pricing details? From the content creator himself, ICT, and Romeo. But if you really focus deep into his thing, you will see that he talks about this. Now let me show you guys another example. It would be beautifully this right over here. That's the middle line right over here. Start. Before it takes out the wick, market will tap the start of it, retrace, accumulate. In this case, down here, it was accumulating a lot of orders. Then push out to the 50%, then come right back down, accumulate, then eventually take out the wick. Tap the body first of this, tap the start of block, push all the way back down, accumulate it. Before it takes out the wick, it needs to retrace. Retraced, accumulated, went back up higher, tap the threshold, the resistance block, push right back lower, accumulate a bit more, and eventually before taking out the wick, then eventually took out the wick. What is this? What is the resistance block? Resistance block is basically a total soup. So there's people who put a stop loss. There's people who put their stop loss at the start. There's people who put a stop loss at the 50%, and there's people that put a stop loss on the extreme side at the wick. So this is how you know why. This is why it does that, because through pricing details. I already know market is seen very easy for the market to go over here. It's very easy to tell, but I was like, okay, there's a premium ERL. I will at the moment I will make my bias bearish, but I didn't really think about that long-term drawn liquidity very well. So there's gonna be a lesson on this in a higher time frame. But before we talk about that, let's go to a lower time frame to this market recap. We had a classic expansion profile to the upside. Tuesday low of the week. We had a close above because higher prices. That's all we had. That's literally enough. That was giving us enough power to push it up. We had a near continuation, and we had a bullish order flow. We had nothing else but that. We as well had a deal. Now we have a deal image in a lower time, in a 4-hour time frame, but during that Pacific time, that's all we had. So we're looking for the 6 a.m., 5 a.m. or that 6 a.m. candle to go retrace to about the low and go up higher. But the market never did that, and PPI came out bullish as expected in my bias. Because I wanted to go longs, but market never give it a setup. So CPI closed, then 9 a.m. candle came around, super out the low and tapped out the key level. So I was waiting for that to get in tapped, and I was looking for the right number one, and I'm looking for the valid low, valid high roll. The valid, there was at the CRT low, there was not a valid low there. So I look at it, I was like, okay, there's not a valid low here. I'm looking for this reload to get purged, but even if this was valid low and I get a setup, I'm not gonna enter the trade because the key level was not there, right? So the key level, everything must align. So we had a Tesla liquidity. I was looking for this to get soup and tap the key level, then go up higher. Eventually tap the key level, and when it tapped the key level, it literally closed below the CRT, disrespected the CRT. As you guys know, we did not trade without a range being there. So I was like, okay, I'm done for the day. I'm looking for a trade. And a quick little, I'm gonna be real with you guys. During this time right over here, I fell asleep a little bit because I've been recently been very tired for some reason. Yeah, because MMA and these gym workout made me really sore. So when I wake up in the morning, I don't have enough rest to, continue my day. So I had to take a little nap. I just took like a quick 30-minute nap. Unfortunately, because sometimes you have to be like this, right? So that's why if I were to do that in the morning, wake up a little later, that would just mess up my whole day. And that's why I take a little nap throughout the day, one time in a week. Every week, one day throughout the week, I will, after I wake up 5 a.m. and I do my trading, I will literally take a little nap and wake back up because my energy be going low. But I'm young, so I need to do a lot of stuff, which is beautiful, a part of game. And the lesson is, during my trading hours, I cannot take a nap, I cannot sleep, I cannot do anything. I have to focus on the chart. I'm gonna be real with you guys, right? I'm gonna tell you guys what happened. Although there was no setup, but I don't want to be having this problem when there is a setup and this happens. Guess what? I miss a setup, right? I don't want that to ever happen. So yeah, the lesson number one is to not sleep or take a nap or do anything. I must be awake in my chart during the trading hours. And the next lesson is the higher time for general liquidity. So the next thing is that we're going to talk about is to have a clear drawn liquidity for the long term and pay attention to the price and details. One of the price action details are rejection blocks. Before the market takes out the wick of the before the market takes out the wick, and there's a rejection block and there's an order block supporting the rejection block. And you can see over here, there's a rejection block over here. But guess what? The reason that how comes this is a rejection block is not every candle is a rejection block. This is not a rejection block right over here, right? The reason this is the rejection block because this one has had an order block in there. That's why it was a rejection block, right? So the next lesson is to pay attention to high time frame price action details, right? Which is rejection blocks. So you guys know before markets got the wick and there's a rejection block with a order block supported beforehand. Or with a order block supported before the market takes out the wick, market needs to tap the start of it, retrace, accumulate, then go up to the high, which usually causes when the market taps the body, you usually go from a back to a IRL, then go back to ERL. You can see when the market went back to IRL over here, this did retrace back to IRL, but market made an ERL. So why did it go back to the IRL? This is why you gotta pay attention to the price action details. As I said before, markets at the start of it, retrace, accumulate. We usually tap a IRL, then go up higher, tap the threshold of the resistance block, retrace a little bit more, which it did right over here. Then eventually go up to the high, which it did right over here. So this ERL we have not paid attention. So it would have been from this IRL to this ERL instead of this ERL because this ERL was just for the resistance block retracement. So this ERL is very less important than this ERL, but we don't ever had a step to the upside. But one thing, well, there's a huge expansion, daily range. Why did you not have a setup to the upside? You know, it's rules. I definitely did have a setup. I'm not gonna lie to you guys. I definitely did have a setup every single day here, but they're very low probability. And one other thing is I did have high probability setups. I definitely had high probability setups, which was Tuesday. I had other high probability setup, which was on the Wednesday, high probability, which they happen in London session. As you guys know, I don't trade London session. I don't wake up at 3 a.m. in the morning just take a trade. I don't do that. And the day after that, the next London session offered it again, right? So very high probability to this one. This one offered a expansion to the high time and general liquidity. So since these are the ones that offered it, it's high likely, you know, the New York's probably gonna stagnate a little bit. It will probably give a chance to get in, but sometimes it will not give a setup, right? So definitely did have a trades to expand it to the higher time expansion, but I don't trade London session, so I couldn't take it. But this is my market recap. These are the lesson. Thank you for watching. Make sure you guys like, comment, share, and join the description below. And I'll see you guys later. These are the lesson for the day. And one last thing I wanted to say is I want to say something to chat if you're watching this video. Oh boy, you have to lock in. You can't. You guys, not even chat, like in general to everybody. Don't just spend time on prop firms, right? If you're spending so much time trying to pass a prop firm and get funded, what the prop firm is built to do is built to mess you up. It's built to destroy you, because what it does is you take a trade on a prop firm, let's say evaluation stage. You take that trade and you win that trade. You start thinking, damn, I could have made all this on the live account. So eventually you get that dopamine and you take another trade that's not in your system. Then you mess up the whole account. You mess literally after that happens, your account is fully messed up. Because why I don't really like to trade prop firms. After I get like I'm not gonna lie to you guys. After I'm a little bit more ready, I'm just gonna put 20,000 on a live account and just trade 20,000. I'm not going to mess around with this prop firms. I definitely had a lot of payoffs from it, but it's not worth my time because I want my trades to count, right? That's why you guys feeling so much is that you take a good trade that follow your system, you make money, but it's an evaluation stage, so it doesn't even count. So it's basically useless. And you have to take another quick trade. You have to take like another 34 trades to pass the account. And those trades on the account what happens with that is that it gets you a dopamine to try to get it funded quick, and eventually that will start a bad habits and you mess up. So that's why you guys need to focus really on one thing and one thing only, is making your trades count. Like if you guys don't have, but when I don't have the capital to start a live account, like $50 not that much, right? You could start a $50 risk 5% $50. What's 5% $50? It's like what? That's like $2.5, right? Somewhere around there. Just risk 5% of your account. If it's a little small size, if it's a $2,000 account, $1,000 account, risk 5% and naturally compound it, because compound interest is what creates like wealth, right? As you guys obviously know, that's what you could possibly do in this whole prop firm. I probably will get to one. I probably will try to get to 1 million findings. I probably will have it, and I definitely will. Obviously, I'm T. But my goal isn't even to focus on these prop firms. My goal is overall live trading. I don't like to trade these prop firms. They build up bad habits, which is I take a very good trade, beautiful trade, but it didn't pay off. So I forced another trade just to pass the account. It's where I tried to make it pay off, and then it never pays off. Because why? Simply because of the evaluation stage, which messed up a lot of traders. You could definitely make these profits, but your goal should be on a live account, regulated brokers, right? Don't trade unregulated brokers. I got messed up. I lost around a couple of thousand. They didn't even pay me out. They said I had to deposit more money in order for me to cash out. I was like, I already put a couple thousand here. Why do you want to deposit more? Which that was that. They became trust issues. So trade real live accounts. Trade with real regulated brokers. If you're failing prop firms, the problem you have is not the prop firm. It's like the problem is not you. It's that the prop firms are built to mess you up. So you want to take trades on a live account where if you win, it pays you off. It actually pays you off on that first trade. You don't have to take another 5 more percent to pass the account and eventually try to get paid off. It simply that right there makes a lot of people have built bad habits. You could definitely bypass it just being like me, taking no trades throughout the whole week and taking high profit setups for the long term. But most traders are, that's the biggest problem most traders have. So if you focus on that, you should be chilling. But this is my market recap. I'll see you guys later. Peace out. And yeah, peace.